Hello traders, Nick Shaheen here looking at Twitter. This is more of a revisit how we got here. First of all, they just reported earnings. Today is 7:22. After hours, they are jumping 5%. I believe they jumped higher at first, and they're fading a little bit, but we'll see where it opens. But more importantly is to see how we got here and to see if we can find some clues for the future. All right, speaking of future, was kind of saw the future. I did a couple of videos, one in January and one in February, and I want to share a couple of, like, who knew that 64 was going to matter. I kind of did, and I pointed it out in the video in February that could be the deal, that it's a value to pay attention to. Also, who knew that it was going to get to 80? I kind of almost did because I shared it in the video in January. And let me tell you, I'm not like seeing things in my sleep. It's information in the charts, and I didn't need too many tools. Eyeballs is really all you need, and some intuition. All right, so let me show you a snapshot from one video. This video was from January. You can go back and watch it. So I said this was a monthly chart, and it kind of did a big bowl, and they came back and failed. And I said, what if this failure, that was a bad day when I did the video. I said, don't panic because it's falling into a prior pivot. So it could be support. And I drew a box where the support, there's going to be buyers. Guess what? It didn't even get there. Then this is the potential upside. I said, if it dips and it falls into, this looks like 44-ish, 45, not to panic. And then if they come back to here, that would be an exciting opportunity as big as this. And I drew these during the video. So you can go back and watch the video. It's there, trust me. And then I threw this up. This should be equal to that. And that puts us in the 80s. This is 76, 78, 80. All right, so we kind of knew it was going to get to the 80s. And what about that 64 value? In the second video in February, which is showing you the upside potential that I hand drew the first time, I put it into nice, neat things, and that's where they ended up going because this is also old. I pointed at this. This is from the video. I pointed at this candle. All right, remember this candle, 64 and change. Let's go to today. Let's go to a monthly chart so we can mirror what we looked at back then. So this is the same time frame as those other two charts I showed you. That's that one candle. Look right, and see exactly where it bottomed. The stomach of this huge doji was important from January of 2014. So the machines are not crazy, and this is not a coincidence. I'm just saying, if you don't trust or don't believe or think we're crazy to look at charts, I think you're the crazy one for not doing it, because you're leaving a big tool untouched, even though you know it's there. You see it right there. Nope, you stick with not using the tool, which is better for us because we're competing against somebody that doesn't use tools. So information is there. And here's the drawing that was done based on that other scribble that I did by hand. The dip and then the potential rally to 80. And guess what? They did it almost twice. In fact, overnight they did it twice. So now what do? The overnight poke. Let's go to a daily to see if we can forecast what could happen going forward. Let's see here. So we still have this zone. Okay, so this box I drew somewhere in May. Look at this blue line right now is where it is currently as I'm talking, 73. And this is what this level is right here. See this candle right there? Also not a coincidence. And there's all these guys above it. So let me go check the overnight high. I'm going to put a line. I already forgot. Dang it, hold on. All right, I blame the migraine. The coordinate 76.7 so far is the overnight high. So overnight 722 high earnings. So that is the value that I just want to remember. And I'm going to extend it left. So 150. Boom. All right. Another doji, stomach, and a top. So markets, when they say markets don't have memory, I think they're sorely mistaken. Also, look at this level right here. Tail, 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 meaning they rejected it, and then they rejected it from the other side, and then they lost it. And then here they couldn't meet it, here they couldn't meet it, and now overnight they're struggling with it. So I put this here to see if they ever come back to it. It would be an exit point in my opinion. We will watch this tomorrow and see how it plays out. Twitter breakout, that was my note to myself. So if we open where it is, my first thing I would hear beep in the morning because this orange line would trigger long. I'm not chasing it, but that is chaseable. It's an inverse head and shoulder. Look, failure, comebacks, whatever you call it, cup and handle, inverse head and shoulder, it doesn't matter. It's a prior fail zone that is being taken out, and the upside potential is huge. So if it takes that out tomorrow and Monday, I wouldn't short it because it's going through 80. It will struggle at 80, but it has the potential to go through. Now, there's the problem of the whole market. It's pretty high, so whatever we take longs right now has to work in the prism of the whole market. So if we're due for a correction and that happens, I will wash my keyboard and clean my mic after I say this filth. Like, if we get a correction ever in the next 10, 15 years or so, sarcasm, of course, everything has to play within that prism. So as good as this technical breakout could look, it has to work with the overall market. Also, Fang Gang will report, I believe, starting next week, maybe Apple. Right now, I'm seeing Google after hours at 2,600, the Google L. Closed at 25.68, so it's up $30, $40 in sympathy to something. Snap, Twitter, Snap, whoever. Intel, the reaction is bad on Intel. So keep in mind that everything has to work with the prism of the whole market. All right, so let's recap. Technical analysis is not stupid. The only stupid thing is to ignore a tool that's right in front of us. Second, these levels have been in play since 2014, so they matter a lot. It has history with failing where it is right now overnight, but every failing point is an opportunity going forward. So break through this on a closing basis, and you could have a rally just as impressive as the one that took it to 80. This one will go above 80, with a lot of struggling at 80 because of these prior fails, of course. Once you clear this, the bears will have nothing to shoot against, and then the bulls will be in open air. We're jumping the gun. First, the trigger. Where is it? This one, really, but with immediate failure here, and another here, and a whole bunch here, and here, and here, and here. So it won't be easy, but they'll try to do it. And this is a very bullish market, stupidly so, but hey, you don't fight the tape, you don't fight the Fed, and those are the two strongest tapes and Fed I've ever seen in my life. In fact, that have ever existed. The Fed is crazier than ever, the White House is crazy with more crazy, and everybody's happy. This party will end badly, but I wouldn't try to short it until it starts ending. All right, Nick signing out. If you like the stuff, that's what we do all the time. So find me on Benzinga. That's the easiest place to get to me there. I'll try to put a link in the description, but it's benzinga.com. So reach out there. They kind of know who I am, so you can hang out with me. Speaking of hanging out, actually in the chat room today, I looked at the implied volatilities of this week, next week. There were some trades that people took. Some chose to take calls and some chose to take puts, but we kind of used the opportunity to do a lesson on calendars, spreads, option spreads. People are familiar with vertical spreads one way or another, puts or calls. But then today it was perfect to explain calendar spreads and how they play out on earnings when the implied volatility is different for current week, 2.5 times more than the following week. So it makes sense to, if you wanted to buy calls, it would cost you 50 cents versus usually a lot more to get next week's by selling one closer in time. The video is hanging out in the chat room, and that's what we do all day, every day. We talk turkey. We talk shop, and we look at different tickers upon request. So hundreds of tickers every day go through the chat, and we address all of them, not one left behind.